What is up, guys? This strategy I'll teach you guys about in this vid that me and Dave trade is probably one of the craziest strategies that you will learn throughout this whole course. What I mean by crazy is that when you are right with this strategy, you could have some crazy returns. Like I'm talking 100%, 200%, 500%. I even heard guys who've made 1,000% gains just off of this strategy. Now, it doesn't happen that often, and I'm going to go into more detail about that. But when it does, it is one of these hugely profitable strategies. But first, let's get into the boring stuff. Shout out my brother Dave, thank you for allowing me to come on here and teach you guys something, And then also there's another guy I'd like to shout out. He didn't say to shout him out, but I'll shout him out. So shout out Daddy. He's in our Discord. He's been trading EPs for around 5 years, and he's really the one who's helped me walk through the strategy and put this video together. So shout out Daddy. But anyways, guys, let's jump into this. Okay, now you guys are probably wondering, what's this magical strategy that can make you become a very successful trader from? Now, I know that statement's kind of like, oh, yippee, another guy telling me how I could cheat the stock market. But if you follow the rules and you're strict with your rules, you will make money from the stock market. Just throwing that out there. So the strategy here, they're called EPs or episodic pivots. Now, the guy who's the founder of the strategy, and you hear him a lot, you're gonna hear him a lot in the videos and through Dave's channel, is Kullamägi, this beautiful guy. He plays the momentum on earning announcements, different news catalysts, and usually these things result in big gap ups, and they usually have a follow through that can run for multiple weeks to months. And I'm going to show you examples of this later in this video and kind of walk you through the process of looking for EPs, which is super simple, taking the trade, which is a little bit more complicated, and then managing it once you're in the trade, which is also easy. So let me just walk you through the different types of EPs. Okay, so when it comes to EPs, a really good person to follow is Kullamägi, like I mentioned. He's kind of the founder, and StockB. StockB is another super successful trader, and I highly recommend doing some research on him. But StockB has a really good analogy when it comes to EPs. He organized them into two categories: cats, like meow cats. I don't know why I just did that, and then dogs. Yeah, DOG, dogs. So cats are like your earnings announcements, your earnings surprise. So if a company is like lagging, their financials aren't good, and then all of a sudden they get a huge earnings surprise, jump on their EPS, their earnings per share, and their sales increase, that could cause a stock to gap up and surprise the market. And that's what we're looking for when we're trading a cat type of setup. The cats are less volatile, so there's a lot less swing in the stock and less likely for you to get stopped out. Also less likely to make a bigger move in advance. Now your dogs are your spectacle stocks. So that's like, for example, like a spaceship stock. Like a stock's gonna launch a spaceship into space, and if it fails, stock crashes. If it works, it's gonna rip higher. So that could be like biotechnology too, and basically your news catalysts that are based on a certain event. Now these are way more volatile. If everything goes to plan, they can make you the most amount of money because they're so volatile. But yeah, cats and dogs is a good way to kind of classify different EPs. And that's just getting into the more technical aspect of it. And StockB does a really good job of explaining the cat and the dog when it comes to different catalysts. All right, guys, now we're gonna get into the nitty gritty of this and putting on the trade. So make sure you have your notebooks ready. Make sure you're paying attention because I'm gonna whiz by these real quick. So first thing you want to see is gap up over the moving average. I'm going to show you a quick example of beautiful textbook EP, and I'll just use this for explaining the rules. So DRCT, this is a cat because it had an earnings catalyst. But the first thing you want to see when we're putting on the trade is you want to see it gapping up above all these moving averages. So you see here, you got the 10-day, 21-day, 50-day, 200-day. If you don't know what those mean, I'm going to do a video in the future on basic technical analysis, so you'll all be caught up. But yeah, you just want to see gap up over all the moving averages. Now, the next thing you want to see is big volume in the pre-market. The stock market trades from 9:30 to 4 p.m. Eastern time every single day, 5 days a week, right? Monday to Friday. There are trades that can happen, or people could put on trades in the post or pre-market before the market usually opens, and that's usually like 3 or 4 hours before the market opens. So if we go to DRCT, I'm going to switch it to hourly flame. You can see here this orange is color is the pre-market being traded. This is everything being traded in pre-market before the market opens. So that in my time, that's 2 to whenever market opens, which is 7:30 Mountain Standard Time. Now the way you do this in TradingView is you go down here and you hit you could do regular trading hours or you do extended trading hours. So I have an extended trading hours, and that only shows up on the 1 hour time frame. But anyways, you want to see the amount of volume coming in the pre-market, and look at this volume that came in the pre-market. I remember DRCT was trading like its average volume in the pre-market, which you want to see. The more volume traded pre-market, the better the chances of the EP actually succeeding. All right, the next thing we want to look at here is if we go back, scroll out here, out of the 5 minute, looking at the pre-market, you want to see a big beat over analyst expected estimates. So what I mean by that is if we go into TradingView here and we click on this little green thing, you could see that standardized reported estimate. These analysts who watch these stocks very closely estimated that they're only going to do 0.053 cents per share. That's their earning per share, but they reported 0.23%. And that's a huge surprise to the overall analysts and to the overall market. Now, if you look at the revenue too, that's a big plus too, and you want to be looking at that. Now, Danny did recommend me a really good indicator, and I highly recommend this if EPs are your strategy and you want to learn how to trade EPs. But right now we have this one right here. So it's GIFSIF. Sorry if I'm pronouncing that wrong, but this is really good for just seeing the overall characteristics of the stock right here. So this will allow you to see different things about the stock, and you can use this to determine like the volume, pretty much all the volume buzz. Now I won't go into all of these things. I'm just going to give you the basic overview of EPs, and then if you guys want, I can go more deeper into this or else it's going to be like an hour-long video. The other plus thing to have when you have in a stock that is gapping up and you're seeing it as a potential EP play, you also want to dive into the float. So what I mean by the float is if you go into TradingView here, you'll see the financials right over here. You can scroll down when you're on the stock. Right over here, you know, more financials. How many free float shares are being traded in this overall stock? So what my basic rule likes to be is anything under 150 mil float is something I want to be highly interested if there's multiple options, because the smaller float, the faster this thing will move. And usually the better surprise. You can just see this with DRCT, right? With the smaller float, actually, the more proper this thing's probably going to act. Because if you have like something like a 500 million float, there's a very, very, very good chance there will be a pullback during this EP, right? They won't continue the momentum. And usually those bigger floats are the slower movers. Also look at the float if there's multiple EPs in that day. Alrighty, now that you guys know how to put on the trade, which is gap up over all its moving averages, you have big volume pre-market, it's under 150 mil float, and you have a huge analyst beat for their earnings and their revenue, then you're ready to actually enter a trade and start looking for entries. So let's dive into the entry part of it. Okay guys, just bear with me. I'm going to try and simplify this for you so you can understand it. But I'm going to go to a more recent example, like EBS had a really good EP here. You can see it gapped up above all its moving averages and had a good earning speed, as you can see, just following all the criteria. But now what we're going to do is we're going to go to the 5 minute. So you're taking trades on the 5 minute with EPs. So let's go to the earnings here. So how do you put on a trade when you're trading EPs? The first thing you're going to do when you prep to take a trade is you're going to watch this first 5 minute candle. This is right when the market opens, right when the gap up opens. You're watching this 5 minute candle and you're seeing what kind of range it's building. So the first thing you're doing is I would be in the mornings, I'm measuring this range. Okay, it's 8%. I'm seeing if this is within my ADR criteria. So usually I like to see it within the ADR, but with EPS having a really good move, I would probably take a little less capital on this just so I could get into this position. Usually it's ideal to have this range within the ADR. So here it's 7% with an ADR of 5. It just allows you to get more money into the stock. And how you enter the trade is as soon as the stock, so at 305 clears this high, the high of this candle, which is 305, you enter the trade right here. The first candle, as soon as it clears this high, you enter the trade, and you enter right here. So at 305, I'd be in this trade. Just like that, you would just watch it, and then you set your stop loss at the low of day. So you set it at the low of this candle, which is the low of day, which is 282, and you would just ride this thing until it if it stops you out, or until it breaks the 21 day. I will be honest with you with this strategy. I'll show you a lot of winners, but there are a lot of losers. This strategy is right only around 30% of the time. The reason this is so successful is your losses are so small, but when you catch a winner like something like DRCT or something like EBS, you're making 400, 200, 100% moves, and it's just gonna absolutely knock out your losers, and your profits are gonna be so much greater. Now, once you're in the trade, it's just super easy. You just manage it. Usually what I do is as soon as I put on this trade, I just set it my stop low a day. I go to the daily. If I get in at 305, I use this long position tool on TradingView, put that in, set where my stop is, 281, and then I usually like to take half my position out at 2R. That's just because I'm locking in some profit, and if this thing reverses, I locked in some profit, and then I usually let the other half ride. EBS is a really good recent example of a really perfect EP, because you had a big gap up on earnings, and then I take profit at 2R and let the rest ride on the 21 day. Usually with breakouts, I like to play the 10 day. With EPs, I play the 21 day and give it a little bit more room to work, because if I played the 10 day, I would have stopped out here and would have missed all this. If I play the 21 day here, you get the full gain, right? Now you will be giving a lot of your profits back, and it's tough to hold through this, but trust me, that's why you got to stick to your rules, because look at the amount of gain you missed on this beautiful play. But yeah, EBS, perfect. So if you would have held through that and played the 21, played your rules perfectly, you would currently be up 225%, and you would still be in this trade. Absolutely beautiful move, and it's just wonderful to see. So write this down. EPS, great example. You love to see it. Absolutely beautiful move. Now another example, let's look at root. Now this is another cat example. So going back to the cat and dogs, EPS was a cat on earnings. Root was still is a cat because it had a beautiful EP here. So same sort of thing. Gap up on earnings. You had a ton of volume pre-market. Really, really nice surprise. I usually like to see the surprise over 100% on the EPS, but this still was a really nice surprise, and the revenue was really nice too. And most of the time, you're not going to get perfect setups, but once you do get those really close 4-star, 4.5-star setups, these things can really run. But you get in the 5-minute opening break on this candle with all that volume coming in, and look at this thing. Yellow line was the 5-minute opening break, low a day, and then you get a beautiful 500% move. Like these things, when you catch them, they really freaking move. EPs, like I said at the beginning of the video, stupid crazy strategy. When they work, they really freaking work. Now I'm gonna show you a dog, because big dogs gotta eat. Now with these, RVSN is a great example of a dog. Most of the time they're just on news, right? They're not really any earning announced. There's no earning announcement. So dogs, they're more volatile, but they can have some pretty ridiculous moves, as you can see. It's the same sort of rules. It's just you gotta be careful with what you're playing, and you gotta really read into the news. Cats, you could just look for the EP surprise and see if it's a big beat or not. Dogs, you gotta do a little research on the stock and what the news is about. For RVSN, it was some sort of license in the European Union. Like they were the only ones who could perform this certain activity, and then basically what happened was everyone's like jumping aboard and buying the stock because they're the only ones who could do it. But then people realized that no one really cared. It didn't really matter what RVSN was doing. Still, that's why we're seeing swing traders, not long-term investors. We would have caught this nice round and exited right around here. RVSN, you had this beautiful gap up right here. This is your entry round, gapped up on volume here and gapped up through all the moving averages. You would have took it on the 5-minute opening range break, so the high of that 5-minute candle. Set your stop at low a day and would have made a really killer move of another 500% move. So with dogs, very volatile. Definitely can get some crazy moves out of it too, but they are less predictable. That's why I do like playing those EPs, because they're less volatile. They have a more structured and usually can go for a more longer term run, but dogs are also something that we like to play. Alrighty guys, I know this was probably a lot and you're probably like, holy, this is a crazy strategy. It is a really crazy strategy. Like, you can make some big money, but if you're starting out as a trader, I would not focus on this. I'd focus on your base breakouts, your trend breakouts, because you really have to be on the ball. And when you're playing like that 5-minute opening range break or different EP names, they can move really fast. Fast movers is where the big money is. So you really have to be on the ball if you want to play something like that. And I like playing EPs because, like I said, you get these huge moves, but on the flip side, you're only right 30% of the time. So are you okay with being wrong 70% of the time? You got to ask yourself before you start trading this strategy, because you're going to start taking losses. Yes, I'm showing you the big winners, but these are very seldom. There's plenty of losers or failed EPs up. So keep in mind when you're playing something like these, just remember what I said here, that you got to have a little talk to yourself and be like, do I want to play this, or should I focus my time on mastering something else and then maybe come play EPs and get more understanding and stuff. Alrighty guys, that wraps it up. If you have any questions, join the Discord, subscribe, hit that like. We're here to help you with EPs, with any kind of question you have the stock market. Me and Dave want to build a trading community that brings together a lot of like-minded people and build a team so we can all succeed in the stock market together. But yeah guys, love you all and see you next time.